this show on the road.
Let's do it, Ken.
Right.
Thank you. And now let's turn our attention to Thinkorswim from TD Ameritrade. Justin, I will go to you first. The market's looking pretty good here over the last week and a half or so. So what do you think about where we are now? Should we start worrying about getting extended? Are we still in the clear from that perspective? And how are the setups looking out there?
Well, so I think, the setups are dwindling a little bit. You still have some areas that are showing some strength, or I should say setting up. There's a lot of areas showing strength. And particularly, as Ken mentioned, I mean, you look at the Russell 2000, go ahead and pull up IWM. That got back above its 50-day. It's very typical. This one is the one that usually gets hit hardest, and it'll have a strong bounce up. So this has been seeing some bigger moves. So the fact that got above its 50-day moving average line, I think, is promising. But going back to the Nasdaq, I don't think we're at a point yet to worry too much about the extended nature. We're still not too far away from those moving averages, but it certainly was better to get those early entries as much as possible. And that's something that we were talking about on the podcast a couple of weeks ago with Chris Gessel, our Chief Content Officer. So if you were able to get in on a lot of those, I think that was just a great time to be making the purchases, because now you've got cushion. Some of these stocks they've been running up like on the right-hand side of their cups, but we almost like want to wait for some handles to form in some of these cases. There's a lot of stocks that are just out of there. So I guess the biggest thing to make sure you're not doing is chasing extended stocks.
Yes. Couldn't have said it better myself. But Scott, let's turn to you and take a look at FFTY. As Ken mentioned, the IBD 50 ETF, which is a proxy for growth stocks. Do you think that the action at the end of last week, Scott, was significant? Does it feel like we're at a turning point for growth stocks with the choppiness that we've seen for the bulk of this year?
I don't know, Allie. I really don't know.
Pass.
Gosh. I think this is a do nothing period. I don't want to put on a bunch more exposure, because I feel like I'm just putting it on because because the market's good rather than the setups are good, if that makes sense. But the market's fine. We're always so concerned with the market, and I'm the worst. But it's sometimes, you just do nothing. You just let your positions work. And, you go play golf or you go fish. If you're trying to capture the bigger trend.
Do you do either of those things?
I used to. Before kids, I would play golf almost every day. I'm not blaming my kids. I'm just saying. And before this job, too. It was a lot easier to go play golf when you were your own boss.
Right.
So
that darn Arusha.
Yeah, exactly. That guy. I think the market's fine. This weekend, I didn't see a lot of setups, so I'm not going to push. I'm not going to buy something just because I feel like, I'm X amount percentage and I should be Y amount. I'm just going to leave it be for now. But, 50, that's a nice little move in 50. IWM had a really good day on Friday. What is it doing today? It's not giving back those gains. So the overall indexes are they're not showing any signs of strain.
Mm-hmm.
I will say that I felt like, my account has been making more progress. I was in this trading range for a long time where, and I finally feel like I was making a little bit of progress outside of that trading range to the upside. Whereas, usually when I got to this level in my portfolio, that was about time where it would start declining again. So I guess the one thing that does make me nervous is I'm kind of waiting for that. Okay, is it going to happen again? I'm getting into those that area where I've been declining, but I think since the end of July, it has felt like there's been a little bit of a shift where the setups have been a little bit easier. Things have been just a little bit easier. Now, granted, it still hasn't been trending for very long. There's still been these rotations that are happening under the surface. You'll make some progress. You'll pull back to the 50-day moving average line on the Nasdaq. So that's still happening, but it just seemed like it was a little bit easier to manage this time around.
Mm-hmm. And so, Ken, speaking of, if investors out there who trade the IBD style are starting to see a little bit more momentum in their portfolios, does that mean that maybe you can start treating holdings a little bit differently instead of maybe taking profits a little more quickly? Can you rely more on those weekly charts and try to capture bigger gains?
Yeah, I think so. I think the bottom line is if you've been buying stocks over the past few weeks, at least in my situation where I've increased exposure a little bit, it's like new buys are just not taking off. They're just kind of I'm up on some, maybe a few percentage points. Seems like where my portfolio is making headway is just names that I've held for a few months that are comfortably with profit cushions. But new buys, it's still challenging. It's nice to see the setups out there from Shopify and Facebook. But even with the technical health of the market, I mean, I really love the look of the Nasdaq's weekly chart, for example. I mean, just a good bullish move last week after a solid test of the 10-week moving average. But when it comes to new buys, it's like, well, this stock looks good, but I just not entirely confident the timing is going to be right. So new buys are still challenging. Kind of letting what I've owned for a little while continue to work. That seems to be working the best. I'm not averse to buying new stuff at this point because we are seeing some pretty decent looking individual stock charts out there. It's just that I'm not entirely confident that new buy is going to give me a quick 20% gain in a few weeks' time.
Okay, well, we will see what this week brings. And you mentioned Shopify. So, Justin, let's go there first. We are now seeing a new base here form for Shopify and a couple of trading sessions in this range here. Is it actionable now, though, off of a declining tops trend line?
So, I mean, Shopify was a little bit tricky. It did give some signals where it was looking like it was, potentially going to go. I mean, you see where it kind of came up to that 1583.37. Just recently. I mean, that was certainly the last time we played it on a Swing Trader, where you just highlighted it before earnings. We did that quick thing, but then it looked like after earnings it was going to come up, and it had that nasty reversal, went down again. Now it's bouncing off the 50-day line. We put this back on Swing Trader last week, and right now we're not too far up on it. We're starting to make a little bit of progress, but I think this is a decent setup. The trick with Shopify, of course, is if you go to the weekly chart, it's one of those, hey, how far have we come? But this is a base. If you're going to get into it, you're going to want to get in when it bases and potentially moves back above that 50-day moving average line, rather than trying to buy this extended like what happened in 2020.
Right. Yeah. Instead of the breakout, it goes back to those early entries. We
Right.
can't say it enough. So you feel like it's